Right, it's been a while since my last video, so I think I'll do a post FOMC statement update this evening. Um, Start off with the stock market. This is just par for the course. Markets are always propped up ahead of Federal Reserve events, so this one was no different, and we were expecting this. Um, stock started down into an intermediate decline right here. The problem is the Fed is not going to be able to get away with, um, you know, a 25-point basis cut or no cut if the stock market is moving down. So, um, they made sure that, they tried multiple times to prop this thing up, and it kept selling off. And then we get I believe this was a pre-market um, move to get a gap above this resistance zone. That sets the market up to be close to the all-time highs in time for the FOMC meeting. And it looks like the plunge protection team was ready to step in if the market sold off. So my thought was that we're probably going to stay um, within spitting distance of these all-time highs. We might even make a marginal new high, but I don't think they're going to be able to keep this market propped up more than a few more days, and then we're going to get the typical sell-off after uh, the FOMC or the Federal Reserve event. So you can see what happened last time. A very wicked sell-off. I think there's probably a decent chance we're going to get something similar, but I don't think it's going to happen tomorrow. Actually, I doubt that it's going to happen this week. It'll probably be sometime in the next week before it starts. They'll try to keep this propped up as long as possible, but we're very late in the daily cycle now, and I just don't think they're going to be able to keep this market elevated for too much longer. But the the plunge protection team has a printing press, so I cannot give my blessing to short the stock market. So even though I think we're going to have some kind of a sharp pullback into a daily cycle low here within the next 5 to 10 days, I just don't really think it's a shortable event because you just never know. They have the ability to print unlimited amounts of money, so it's not inconceivable that they can keep this thing propped up and prevent a correction. And then moving on to gold, we've been looking for some kind of a bounce out of a daily cycle low. This cycle is getting really mature. But gold, I thought maybe it had started, and but gold did make a slightly lower low today. You can see right here, slightly lower low. So that negates this as a daily cycle low, which means it's still in front of us. So the 50-day moving average, I think, is somewhere right around in about 1480, and then the 38% Fibonacci retracement is down here around 1450-ish. So one of those two is a potential target for this daily cycle to bottom, and then we get our bounce. But again, I think the third daily cycle, when we get a confirmed daily cycle bottom, I think the third daily cycle is going to left translate. So if you're going to try and play that bounce, you're going to have to be really nimble because it could roll over quickly. It's just going to take some time. These intermediate degree corrections. Let me back this chart out a little bit. So when you get a move like this, this was a very powerful rally, very easy to make money, strong trending move. That conditions traders to assume that this is now the new normal. And so they want to buy quickly on any correction because they assume that, any minute we're going to repeat this. And, we're going to get the next one of these up. And I've gone over this before. This is just not how markets work. Uh, Periods of very easy trading are usually followed by periods of very difficult trading. And I think that's probably what's coming. Um, as I said, at some point here, we are going to get a bounce. Doesn't look like it has started yet. So anybody that's bought in here, they were too early, and now they're probably going to get stopped out of their position. Maybe we get our bottom here probably next week, I would guess. And at that point, everybody will be probably too scared to buy, especially if we get another leg down. And then when we do get a bounce, they'll become confident that the bounce is the real thing right about the time that it's topping, and then we're starting the next leg down. That's just how these intermediate cycle declines unfold. It's hard to pick the bottom. They can the first leg down can just go further than you expect, especially if you're in a big hurry to buy. And then if you buy early and then you get stopped out and then we get another leg down, you're too scared to pull the trigger lower, and so you're waiting for a bounce, something that looks convincing. Once we do get a convincing bounce, then at that point your emotions tell you the coast is clear to buy, and of course that's right about the time that the bounce runs out of steam, and then we roll over and we start the C wave down. And most intermediate cycle declines unfold as an ABC pattern. And right now we're just in the A wave down. We don't have anything yet that would qualify as a B wave bounce. And once we do, then you can almost bet the farm that it's probably going to come up short of making a higher high before rolling over and continuing down. So let me widen the chart here. All right, so looking at the big picture, we've got a major resistance zone right in here, 1520 to 1550. We made it right into that resistance zone. The problem being we got there very late in this intermediate cycle. So that was a big warning sign that we were not going to get a sustained breakout through this resistance. Sustained breakouts that produce sustained moves, they need to come early in an intermediate cycle. So right here, we did break out above this resistance zone here at about 1370. We did break out of that early in the intermediate cycle. You can see it came just a few weeks after the intermediate cycle bottom. So that had very good odds of producing a sustained move, which it did. We got to this resistance point very late in the intermediate cycle. So very low odds that a break through this was going to produce a sustained move. More than the most likely outcome was the smart money would sell, the break through 1520, sell their shares into that as the dumb money retail traders are buying late in the cycle, and then that allows the smart money to get on the sideline. So again, we don't even have confirmation yet that this second daily cycle has bottomed. Once it does, we've got to have a complete third daily cycle before the intermediate cycle bottoms. So, this is going to last into, easily into October. It might even last into early November before we get our buying opportunity again in the metals. And when it comes, everybody is going to be bearish at that point, just like everybody is very bullish right now. That's what happens when you get a move like this, turns everybody bullish. We'll get, a correction that'll last long enough to where it wipes out that bullish sentiment, and everybody will be bearish, and then we'll be set up to break through this resistance zone and get a sustained move, maybe up to the $1,700 to $1,800 level during the next intermediate cycle. But before that can happen, got to have, a long, difficult, frustrating correction that'll build the fuel for the next leg higher. And right now we don't have it. We're not even close. Gold hasn't even dropped below the 50-day move or 10-week moving average yet. Has to do that. Has to turn this moving average back down as a confirmation before we get our intermediate cycle low. So, it's just going to take time. There's no need to be in a big hurry to buy anything yet. We've probably got, minimum 4 and maybe as many as 6 more weeks before this intermediate decline bottoms.